Hey, what's up everyone? This is Dark Pool Algo, and thanks again for joining me on another in our educational series on how to trade the stock market. This is an ongoing video series that I'll be doing for educational purposes, and this will help you learn how to trade the stock market. This is good for beginners, intermediates, or even some professionals, because we will go over some pretty standard and very well back-tested technical analysis. So if you're just starting out in trading stocks, options, or even futures, or even if you have any previous experience, this series will teach you some skills that you can put to use. So today we're going to continue to build on our charts using free tools that are available to trade the stock market. So in this session, we'll be going over the market extension tool. There's been a lot of requests from Twitter as to what this lower indicator does. I'll show you how to install it. If for some reason the chart sharing setup that I provide in a link as a link in the description doesn't work, if you ever need to add it back into a chart, or if you want to add it into another chart, I'll show you how to get it installed. I will be including it in the description as a shared item. This whole chart grid setup will be shared so that you can use it that way. So before we get into it, if you find this content useful, make sure you hit that like button, smash like button, subscribe for more stock market content, and make sure you turn on the notifications so you'll get those up-to-date notifications of when we put out a new video, or if we find any plays that we want to shoot a video on, especially ones that rip. So smash the like button. All right, let's get into it. All right, in our last video, we learned how to add simple moving averages, exponential moving averages, and this B4 indicator. The chart that you see in front of you is really close to what the finished product will look like. So I'm just going to go ahead and open up the, let's see, where did it go? It's the YouTube. One second here. All right, I had the wrong chart set up, so now that we're back, we've got the correct one. We're going to go ahead and show you how to add this market extension tool. Okay, in the last couple videos we went over a couple things. We went over how to add exponential moving averages, how we also how we added the simple moving averages. So the exponential moving averages are the 8 and the 21 and the 34 EMA. The simple moving averages are the the 50 and the 200 SMA. And then today we're going to learn how to install the old market extension. So we've got the B4 indicator in, which is a previous video. Go check that one out. It's an amazing indicator. This lower study is one we're going to be installing. So the first thing we want to do is we want to click on Studies, Edit Studies, which brings up your Studies and Strategies panel. If you go and you look for Dark Pool Algo Market Extension, you would click on that and hit Add Selected. I've already got mine added here, so I just put it in there twice. One thing that I like to do is when it gets loaded, it's loaded with the 7 period length. I'm not really fond of the number 7. It's not a Fibonacci number, therefore I try not to use it as often as possible. So I change that to 8, leave the rest of the settings the same. These are the overbought and oversold levels that you see here. You can add signal breakouts, but I don't really like them. It's just one more thing I have to remember what it does. So that's why I don't have signal breakouts turned on. Click OK and hit apply. As you can see, I've got 2 of the exact same, one stacked on top of each other. I'm just going to go ahead and remove this lower one. I don't need it. Apply. Okay. All right, so I'm looking at the ES, which is the mini S&P 500 futures index. This is a great one to look at because it's very consistent in the way that it moves, right? And it's also really good to show lows and highs and where you could potentially get in and get out. For this demonstration, I'm going to shrink up the B4, and let me just bring this up. If you ever wondered how you could move lower studies around, there's 2 ways. You can use the up and down arrows. You can click and drag. I usually click and drag. It seems to work well for me. All right, market extension. Think of RSI with the market extension, but inverted RSI, if that makes sense. So typically with RSI, this is the oversold and overbought area. One other thing, if you want to change the colors, you can. Overbought is green and up top, oversold is red and at the bottom. If you want to change those to different colors, go right ahead. It will also change this signal line, which is the RSI line. It will change. It's got a dynamic coloring, so it will go from green to red to gray. Gray is obviously neutral, and green is bullish, and red is obviously bearish. I'm going to be focusing on this section of the ES for this demonstration. The yellow section is essentially just neutral or consolidation. I typically try not to trade anything in this. This is a very momentum-based indicator. So as you can see, following price action, starting in this level here, this is the area that I'm focusing on currently. And I'll show you why. The moving averages that we have highlighted here are the 8, the 21, and the 34. So green, yellow, orange. The blue is the 50-period simple moving average. All right, so SPX started selling off. It was currently, one second here. So it was currently overbought and started selling off. Now, there's a lot of techniques out there that say as soon as it becomes oversold, you want to look to get into it. Well, that's not always the case. So ES was oversold. They started selling off. As can see, this bearish red signal line, the signal line turned bearish, and they started selling off. So one way that you could know that the stock was possibly falling was, yes, this is red, so it's obviously got to come down and find a reversal point. So it came down and it found a reversal point and started on this candlestick here. Reversal point, traditional RSI trading strategy, we're like, oh, it's starting to reverse, let's buy it. It's, it's obviously at a demand zone, it's a good value. You would think that as well. It's below the 821.34 touched against the 50. Oh, this would be a good entry. However, you would have gotten juked. You would have gotten head faked. So what happened was RSI was overbought. One second, I always get those two confused. All right. It was oversold. They started buying it again, right? Which would be this candlestick here. Price came up above the 34.21 and 8 EMA, and this looked like it might be a reversal. However, the market extension signal line turned bearish, turned red again, all within that same candle. What that told me was that this was not a true move. This was a head fake, right? And that I should be patient because it was in the yellow area. Once again, the next day, more selling, more selling, more selling. We finally got a reversal signal that broke back into this decision area and continued neutral. And even though price was going up, this indicator hadn't, the line hadn't necessarily changed yet, right? As soon as that line changed from neutral to bullish, I'm going to look and try to formulate an entry. I'm going to go through my checklist. I'm going to go through my rundown of what I need to do before I take an entry. So what I found was that I had stacked positive EMAs. That's obviously a good bullish indicator. It's also one of the check boxes I have before I take a trade. So stacked positive EMAs. We've got nice strong direction. We're trading with the trend, right? We're in a bullish trend. However, the signal line was still neutral. Well, that means that this could potentially come back down and fake us out again like it did earlier. As soon as that signal line turned green and crossed above the 60 period or the 60 line, that gave me confirmation that this was a good trade to get into, and that the trend, all of the signals lined up with the trend. So the next bar, so that was here, it turned green, so I'm getting prepared, crossed above the 60. That gives me an indication that this is going to become a valid trade. Price came back down, confirmed on the 8 EMA. The market extension is green and bullish. And from that point, I would have entered the trade on this candle that had closed above the 8 EMA. Let me remove this. All right, so we would have entered the position here, obviously as close to perfect as possible. There's no perfect entry, but let's just say we got in there. At that point, I would have ridden price strength and the trend, as well as the technical analysis of being stacked positive EMAs, market extension is bullish, right, and increasing. We would have ridden the price all the way over to approximately this area here, where the signal line had changed from bullish to neutral, right? That would be the first candle that had dipped below the 8 EMA. There's a lot of different strategies. Ride the 9, ride the 8. Those strategies essentially say get into a position when the candle closes above the moving average, get out of the position when the candle, at least half of the candle, closes below the moving average that you got in on. Okay, so this trade would have been validated here at this candle that you see here with this circle. This would have been a validated trade in that it closed 50% below the 8 EMA. However, I would have known that this trade would have been invalidated because the trend line, or the signal line, had went from bullish to neutral, and it had started to close below the 60 line, so back into the consolidation decision area, neutral. It's yellow because it doesn't really know what it wants to do. I could have gotten out there for a little bit more profit, but I definitely would have closed my position here. Now this trade, let's say we had gotten in the first time that it had gotten oversold, right? And just the first time that I had gotten oversold, we got into a position. We would have gotten into the position on this candle at some point, right? And we would have gotten head faked out. So we've, depending on the risk tolerance, this was a 3748. This was a 50-point drop from this position to here, right? You would have lost potentially, or you would have at least had to hold through a little pain, about 3%. If we would have waited and incorporated this into our trading strategy and got into the position here, you could have potentially ran this for, let's see, come on. This was a 3% positive trade, or 117 points on the ES. Obviously, pretty solid numbers there. Okay. Continuing on, another instance where we would have bought, could have bought over here. Even if we had bought at this red candle, reversal candle, oh, this is a doji, right? It's spinning top. Oh, good reversal candle, we'll buy in. We would have bought in, oh, things are going great, we're above the 8 EMA. However, our market extension signal line has not turned bullish yet. So price, for whatever reason, didn't like what was going on, and started becoming bullish or bearish again. So the nice reverse here, we sold off again. So again, we're oversold, right? I keep doing that. I'm gonna have to write a little note. Have my kids write me a little note so I can stick to my computer that oversold is at the bottom and overbought is at the top. I also got supply and demand zones. I understand which one's which, but the wording, I have a little dyslexia on that, and so it kind of sucks. But the point is that if we had gotten in here when it was oversold, typical RSI strategy, we would have got head faked out again and potentially lost some more money. Again, another head fake all the way up into this candle here. I would have seen the signal line change from neutral to bullish, which would have told me to begin getting prepared for a trade, and that's on this candle here. Right, this candle, come on, this candle here. I'll just throw a line up there so it looks, you can see how the signal turned from neutral to bullish. This is a preparation candle. I would have entered the trade after it had broke above the 60, which would have been the next day, which would have been this level, would have been this candle here. We're above the 8 EMA, stack positive moving averages. Market extension is bullish and increasing. We could enter the trade, follow the trade until we got validated out. The market extension tool went from bullish to neutral in this candle, right? The 8 EMA strategy would have validated you out at this candle here. So the difference between the two is this. So this would be like the ride the 9 or ride the 8 strategy. Market extension candle would have indicated it would be possibly time to readjust the trade or get out on this candle. So again, let's say we got in here, 1.75% or 68 points versus versus 0.78 or 30, and that's if you got out at the high and not down here where you lost 18 points or negative 0.46%. All right, that's it in a nutshell. Definitely a great additional indicator to help you with any trading strategy. It's pretty predictive, and if you have any questions about it, make sure you hit me up in the comments. And that's it for today. If you found this content useful, once again, hit that like button, turn on subscriptions, or subscribe, turn on notifications so that you get notified every time we put out a new video. Thanks for joining me, and everybody, trade safe.